Welcome back. This is Chapter 18, Activity-Based Costing. In this chapter, we are going to organize our costs based on activity. We discussed activity-based costing very briefly. We discussed this back in Chapter 16. Now, let's talk about it a little bit more in detail, activity-based costing. We're going to also recap a few things. First, let's talk about how to cost product, or what is product costing. Determining a cost of a product is called product costing. It consists of direct materials, direct labor, and factory overhead. You know that. We've been talking about that. That's all we talk about when it comes to manufacturing. Direct materials, direct labor, factory overhead. That's how we figure out what the total cost of a product is. We can directly trace direct materials, direct labor, and factory overhead to a product. At least direct materials and direct labor, we know we can directly trace to a product. Factory overhead, kinda. It's more indirect. So therefore, we usually attribute a percentage of factory overhead to a product. Now, with factory overhead, we have to figure out how we're going to apply factory overhead. What we learned about briefly before is called a single plant-wide rate method. We discussed that very briefly in Chapter 16. I think a little bit in 15 too. I don't think we talked yet about multiple production department rate, and I know we haven't really gone into great detail about activity-based costing. But here's how it works. We select one of these three methods for applying factory overhead. Either single plant-wide rate method, multi-department rate method, or activity-based costing. Single plant-wide method is simply we take factory overhead, we divide that overhead by the number of units produced. That's it. Nice and easy. Nice and very simple. But it doesn't really give you a true cost. Multi-department is good when you have different products that you're selling. Like, for example, lawnmowers and snowmobiles. They're totally different products made in totally different departments. And they use different materials, different labor, similar overhead. We'll talk more about that. But we're going to do a deep dive on activity-based costing, which is very specific to how we apply factory overhead. It's more accurate. It's probably the most accurate way of allocating factory overhead. Most common methods of factory overhead are using predetermined rates. That would be a single plant-wide method, multiple production department method, or activity-based costing. The one we choose directly impacts the total cost of the product. The total cost of the product is going to be different based on how we apply the factory overhead. Let's look at it from an example of this company, Ruiz Company. They manufacture snowmobiles and lawnmowers, riding lawnmowers. So let's assume this company produces snowmobiles and riding lawnmowers. Let's look at it from and they do it in a single factory. Okay. We have a total budgeted factory overhead of $1.6 million for 1 year. And $20,000 is budgeted for direct labor. Or I'm sorry, 20,000 hours is budgeted for labor. So here's how we decide to break it up. We are allocating 10,000 hours to snowmobiles and 10,000 hours to riding lawnmowers because we have a budget of 20,000. We produce both snowmobiles and riding lawnmowers. We plan to produce 1,000 units of each, and each unit takes us about 10 hours to make. It takes me 10 hours to put together one snowmobile. It takes me 10 hours to put together one riding lawnmower. So 1,000 units times 10 hours per unit gets me to 10,000 hours total for each type, each product line, I should say. Which tells me it's going to take 20,000 hours for that year. Okay. Now, under the single plant-wide method, which is the easiest method, we take our total budgeted factory overhead, in this case it's 1.6 million, and we divide that by the total budgeted plant-wide allocation base. I can hear you. Dr. B, how do I figure that out? The total budgeted allocation base is a measure of operating activity in the factory. In this example, it's direct labor hours. Now remember, we said that we're budgeting 20,000 labor hours, right? So let's do a deep dive on this. So our company has $1.6 million of factory overhead budgeted for the year. We have 20,000 direct labor hours budgeted for the year. That gives us $80 per direct labor hour. How we got there? We took $1.6 million and divided it by 20,000 hours to get us to $80 per direct labor hour of factory overhead. That's our factory overhead rate per hour, right? Now, this $80 gets, of course, applied to each snowmobile and each lawnmower that I sell. So, as you know, it takes me 10 hours to produce each unit, each individual unit. Whether it's a snowmobile or a lawnmower, it's the same. Okay? So I take my $80, which is my single plant-wide factory overhead rate, times the number of hours it takes me to produce each unit. $80 times 10 hours, that's $800 per unit of factory overhead. Of course, as you know, there's more than just factory overhead that goes into it. But for all intents and purposes, we're just talking about the factory overhead. We haven't even talked about the direct materials, the materials that's involved. But we have our overhead of 1.6 million, $80 per direct labor hour, times 10 hours per unit is $800 per unit. The $800 per unit is just overhead. Okay, so this method, it's easy to use, right? It's very easy. It's not very expensive to implement this method. But the thing is, it's not very accurate. It doesn't really take into consideration the volume of production. It doesn't take into consideration that there's going to be different volumes for each. It's just a blanket statement. That's why single plant-wide method, it's okay, but it has its flaws. Now let's talk about multiple production departments using factory overhead rate. So when there's multiple departments, there's going to be significant differences in the manufacturing process. It's going to take me a different amount of time. It's going to take me a different amount of electric that I use to produce a lawnmower than it is a snowmobile. They're totally different products. There's totally different departments involved here. So in this case, factory overhead costs, they'll be a little bit more accurate because they're directly tied to the individual departments. Makes sense, right? The multiple production department method uses different rates for each production department. It's to allocate the factory overhead to their respective products. This is different than the single plant-wide method that only uses one rate. So in other words, I have two different departments, I'm going to have two different rates, which is more accurate than just having one rate and applying it to everything. So here's the difference. Single plant-wide rate, the whole gets applied to all products. Multiple productions, department rate, I apply it to each department to make that product. Now for my snowmobiles, I have a fabrication department and an assembly department. For my lawnmowers, I have a fabrication department and an assembly department. So let's look at it from our example. And again, this is the multiple production department factory overhead rate. Let's assume that our company, Ruiz Company, has the following production departments to manufacture both snowmobiles and riding lawnmowers. We have a fabrication department, which molds the metal, right? They do all the soldering and the shaping of the metal. They cut the metal, they shape it, and create the frame, right, of the snowmobile or the riding lawnmowers. Then we also have an assembly department. This is where they put the engines together. They put the all of the electronics in, all that type of stuff. Now remember, the company budgeted $1.6 million of factory overhead total for the year. But we're not going to treat that the same way, because again, each department has its own respective budget. In our fabrication department, we're going to allocate $1,030,000. In our assembly department, we're going to allocate $570,000. You add those two together, that's $1.6 million. That's our annual budget, right? So we spread the annual budget across our two departments individually, right? So for each production department, the factory overhead rate is computed by this equation. Very important equation to remember, by the way. We take our budgeted department factory overhead divided by budgeted department allocation base. Let's look at it for our examples. So let's assume that our company, the Ruiz Company, uses direct labor hours as the allocation base for the fabrication and assembly departments. Each department uses 10,000 hours of direct labor. So here's how it's calculated. We take our $1,030,000 that was allocated to our fabrication department, divided by the 10,000 hours that's budgeted to that department, gets us to $103 of direct labor hours. In the assembly department, we budgeted $570,000 divided by that 10,000 hours allocated for that department. You get to $57 of direct labor hours. Now, you can already see the difference between this and the single plant-wide method. Now, we said that each unit takes 10 hours to produce. That's still true. But the difference here is that 10 hours that it takes to produce each unit, we allocate a certain number of hours to the fabrication department and a certain number of hours to the assembly department. For snowmobiles, we allocate 8 hours to fabrication and 2 hours to assembly. In the riding lawnmowers, we take 2 hours to fabrication and 8 hours to assembly. There's still 10 hours per individual unit. Now here's the breakdown. For snowmobiles, we have 8 hours for fabrication at $103 per direct labor hour. We have 2 hours of assembly. That's $57 per hour. So $824 plus $114 gets us a total of $938 of factory overhead per snowmobile. Now let's look at it from a riding lawnmower. Fabrication, we got 2 hours of fabrication and 8 hours of assembly. $103 for fabrication, $57 per hour for assembly. 206 plus 456 gets us $662 per riding lawnmower of factory overhead. Now you can already see the stark difference between this method and the single plant-wide method. And here's how it looks again graphically. Now remember, in the single plant-wide method, we allocated $800 of factory overhead for each snowmobile and each riding lawnmower. In the multi-production method, it's different for each department, which makes it different for each product. $938 for snowmobiles, $662 for riding lawnmowers. We can see that there's a huge difference of $138 for each method. It's $138 more for multi-production department for snowmobiles, $138 less for riding lawnmowers. And that's a pretty interesting difference. We also call these distortion costs. The distortion costs are caused by averaging differences between the high factory overhead costs and the fabrication department and low factory overhead in the assembly department. Using the single plant-wide method, it is assumed that all factory overhead is directly related to a single allocation base for the entire plant. But this doesn't work really well for our company because we produce different products and we have different departments. So using the single plant-wide rate method is a distortion because it does not work well for our company. It distorts the product cost for snowmobiles and riding lawnmowers. If I use the single plant-wide method, it really doesn't work for my company because I have 2 different products in 2 different departments. So because of that, it distorts the cost using single plant-wide method. The word distortion means to alter, right? To put it out of scope, out of context. That's what word distortion means. When something's distorted, there's a couple of causes for it, a couple of conditions how it becomes distorted. So condition 1, difference in production department factory overhead rates. Sometimes departments have high rates where others have lower rates. And we saw that between the assembly department and the fabrication department for the snowmobiles and for the riding lawnmowers. The second condition for distortions comes from differences among products in the ratios of allocation-based usage within the department across departments. This happens where some products have high ratios of allocation and others have lower allocations. So in condition 1, the difference between the single plant-wide method and the department method is $103 per hour for fabrication and $57 per hour for the assembly department. The second condition for distortion, by the ratios, we have a 4-to-1 ratio for and a 1-to-4 ratio. This difference represents the distortion because we have a high and a low ratio using the basis of hours. When there's that great of a difference, that's why the single plant-wide method does not work the best. And then for this company, the multiple department method works the best. This is just another graphical representation of these 2 conditions that cause distortion in pricing. Now, let's talk about probably the most entertaining cost method of all of them, the activity-based costing method. This provides a different approach to applying factory overhead because it uses multiple factory overhead rates based on different activities. Activities are types of work, types of actions that are involved in the manufacturing process or service process. An activity could be putting together a frame for a snowmobile. An activity could be putting together an engine for a lawnmower. An activity could be assembling the frame. An activity could be assembling the engine. An activity could be fabrication. An activity could be upholstery. These are activities. It's a type of work. So we use the activity as the base for the cost. We'll talk a little bit more about that. Factory overhead costs are initially budgeted for activities. Sometimes the activity, we call these activity cost pools. This would include something like machine usage, inspections, moving, production setups, and engineering activities. In contrast, multiple production department overhead rates are used. Factory overhead costs are first accounted for in the production departments. So that's the difference between activity-based costing and department method. So here's how it looks. In multiple department method, we have our two separate departments for production that add together to create the product. In activity-based costing, we have multiple activities. This could be fabrication. This could be assembly. This could be upholstery. This could be, whatever. It's based on the activity, and those activities together equal the cost of the product. Okay, so in our example, these are our activities. We have fabrication, assembly, setup, quality control, and engineering changes. These are all activities. Fabrication consists of metal cutting and shaping the product. This activity is very machine intensive, meaning there's a bunch of machines that are doing the cutting, the shaping. These are machines. Right? Then we have assembly. Assembly consists of manually putting together machine parts into the final product. This is very labor intensive. Somebody has to lift the engine to put it onto the brackets. Somebody has to put together the bottom of the drive shaft. Somebody has to put together the various components that from the fabrication department. The setup. Setup consists of changing out toolings and machines in preparation for making a new product. When you hear the word setup in manufacturing, it means to set up a machine. You have to prepare it. You put in oil. You change out parts for the machine. This is setting up a machine. This needs to be done for every what we call a production run. A production run is like a batch. We manufacture lawnmowers in batches. We're not going to just do one lawnmower at a time. That's very costly. You might do 10 lawnmowers at a time. You might do 1,000 lawnmowers at a time. You might do 100 lawnmowers at a time. That's a run. We call that a run or a batch. Run or a batch. It's the same thing. A run or a batch is a set number of finished products that you expect to make in a certain amount of time. But before we do that, before we make a run, we have to retool the machine through the setup process. Another activity is quality control. This is where we inspect the product to make sure that it conforms to specifications. An example would be I'm looking at the lawnmower, I'm shifting all the gears, making sure that they all work. I am looking at the blade, making sure that it spins properly. These are quality control inspections. Usually involves tearing down the product and then putting it back together. When I put something together, if I can pull it apart and then put it back together again, I'm looking for quality. Then we have what we call engineering changes. This is another activity that involves process changes in design or process specifications to a product. An example would be, instead of using a 3-liter engine for my lawnmower, I might use a 2-liter engine for my lawnmower. That is a design change or a specification change. And that involves engineering changes. It's initiated through a product process called engineering change order. Fabrication and assembly are identified as activities instead of departments. As a result, the setup, quality control, inspections, and engineering that were previously allocated to fabrication and assembly are now classified as separate activities. Each activity has a budget associated with that activity. In our example, remember our total overhead budget was $1.6 million for the year. That's still true. But now I have that budget allocated to each activity. $530,000 for fabrication, $70,000 for assembly, $480,000 for setup, $312,000 for quality control, and $208,000 for engineering changes. The costs for fabrication and assembly are less than the costs than they were when they were departments. This is because there are several activities involved. Okay, let's look at it from an example. Let's assume that our company we're producing our snowmobiles and riding lawnmowers. Snowmobiles are a new product for our company. We used to just do riding lawnmowers. And engineers are still making minor design changes to the snowmobile. They might be putting in a different engine. They might be fine-tuning it to go a certain speed. They might be doing whatever they do to snowmobiles. Our company has been producing riding lawnmowers for many years. So here's the breakdown. We expect to make 1,000 units of each, 1,000 snowmobiles and 1,000 riding lawnmowers throughout the year. We expect that we're going to have 100 setups for snowmobiles and 20 setups for riding lawnmowers. Remember, a setup is the tooling that you need to do in order to get your machines ready for running a batch. We're going to have 100 inspections for snowmobiles and 4 inspections for riding lawnmowers. Those are quality control inspections. Those involve breaking down the machines, reassembling them, and making sure that everything is in spec. Then we have engineering changes. We expect to have 12 for the snowmobiles and 4 for riding lawnmowers. Remember, snowmobiles are our newer product line for our company, so we expect to change it a few more times. So the labor hours for fabrication and assembly, we have 8 hours and 2 hours for snowmobiles, 2 hours and 8 hours for riding lawnmowers. 1,000 units are expected for each 1,000 snowmobiles and 1,000 riding lawnmowers we expect to make for the year. Gets us to 10,000 total hours per year that we expect for each type of product. 10,000 hours for snowmobiles, and 10,000 hours for riding lawnmowers. How does it look for activity-based? So we have our 1, 2, 3, 4, 5 activities. What we do is we take our direct labor hours for each, for fabrication and assembly, 8,000 hours, 2,000 hours, 2,000 hours, 8,000 hours. 10,000 hours for fabrication, 10,000 hours for assembly. Setups, 100 setups for snowmobiles, 20 setups for riding lawnmowers to get to 120. Inspections, 104, so that's 104. Engineering changes, 12 changes, 4 changes, that's 16 total changes. So now that we've figured out what our activity-based usage is going to be, we take our budget for each activity, divide it by the expected usage for each activity to get the activity rate for each activity. So what do we have here? $53 for fabrication, $7 for assembly, $4,000 for setup, $3,000 for inspections, and $13,000 for engineering changes. You take all of these together, you divide that by 1,000. Reason by 1,000 is because it is 1,000 units that we expect to produce. That gets us to $1,294 per unit using activity-based costing for snowmobiles and $306 for riding lawnmowers. So again, you take each one, you add this plus this plus this plus this plus this, divide by the total number of units you expect to produce, 1,000 here, 1,000 here, and that gets you to $1,294 per snowmobile and $306 per riding lawnmower. Now, when you compare the activity-based costing to multi-department, and you compare that to single plant-wide rate, we can see very clearly that activity-based costing is way more accurate of an overhead allocation method than anything else. It's way more accurate because it's down to the dollar, it's down to the accuracy of each activity. Now, of course, there's going to be distortion when we look at each. And to calculate distortion, what you need to do is you take your plant-wide method minus your activity-based method to get the distortion rate. The distortion rate tells us what would be overstated or understated in cost based on the difference between single plant-wide method and activity-based costing. This is important to know because it also tells us how much we should sell our products for, to make sure that the distortion rate would be covered. And so activity-based costing is really the most accurate method of costing for overhead because it's the most precise. It's the most accurate. Generally accepted accounting principles require that selling administrative expenses are recorded as period expenses on the income statement, just as they always are. However, you can allocate these through overhead, but it has to be tied directly to a respective activity that can be applied to that respective product. Okay, so let's look at it from another perspective. We have this company that produces 2 products. Both products have the same total sales volume. However, the 2 products' selling administrative expenses are different. The reason why selling administrative expenses can be different for a product is because of various activities that are involved. If these activities are the same, then the cost allocation would be the same. However, that would be misleading because the activities for selling each type of product is different. So what do? We calculate a couple of rates. So we calculate what we call an activity rate and a warranty claim rate. Warranty claim is, as you know, it's like what are the odds of me claiming on a warranty? For example, recently my laptop screen broke. I had purchased a warranty for $300 that covers 3 years. I ended up using it, but the chances of you actually using a warranty are relatively slim. Okay, so how do we calculate all this? We take budget activity cost divided by total activity-based usage. In this case, our activity is warranty claim activity. We take the budget warranty claim divided by the estimated, so 150,000 divided by 100 gives us 1,500 per claim warranty, which is going to be different for each product because the activity base for each product is different. What about a service business? So let's look at it from a service business. We have a hospital in this example. There are 3 steps to take when you allocate activity-based costing to a service business. First is identify the activities. Second is determine the activity rate for each activity. And third is to allocate overhead costs based on each activity. In this case, our product is our patient, right? Here are the activities for a hospital. We have administration, radiology, operation, pathology, and dietary. For each, we have an associated cost. So we take the budgeted cost divided, the total budgeted cost divided by the activity-based usage. In this example, we have radiology. We have a total budget for radiology divided by the number of images. Number of images is the activity-based rate to get to a cost per image, $320 per image. For each patient utilizes individual activities. Obviously, not all the time, but this is basically how hospitals figure out the cost of having a patient in that hospital is based off of their respective services that they receive. Admission, radiology, operation, pathology, dietary, take all of these and those all get added to that patient. These activities are associated with the patient, so we take the patient activity-based usage times the activity rate. The base usage is based off of each service that the patient received. So 1 admission, 2 images, 4 hours in the operating room, 1 specimen, the patient's been there for 7 days. So you take all of these, you multiply that by the rate per activity. The total cost for this patient for 7 days was $2,790. How we got there is we took the activity base times the activity rate, add all those together. And so that's a pretty good example of what it looks like from a service-based business, but at the same time, the same concept can be applied. And that is the end of Chapter 18. Are there any comments, questions, concerns? Does it all make sense? Marcel, Matt, Samaya, does it make sense?
Yes, it's making sense to me.
Great. Awesome. Very good. Okay. So that was Chapter 18. So what do you have to do? You have a discussion and a quiz that are due by Sunday. The discussion, please participate that as soon as you can. I would like to see your initial post by Thursday, and then 2 responses to 2 classmates by Sunday. Each post should be about a paragraph in length, and if you can, please use citations and references. Those help to make a really good post. And then, of course, the quiz. So it's really straightforward. It's just a matter of reading, reviewing the videos, answering the questions. I recommend that you do the exercises in the book. I think the exercises are super helpful. I also think that these sessions are super helpful. So all of these things together helps you to best understand the concepts. So if you have any questions, comments, or concerns that come up later, feel free to email me. You can call me, set up office hours with me. I'm here for you, and I'm here for your success. So if there's anything else, please let me know, and I'm here for you. And I appreciate all of you taking time out of your busy day to join me today. And I hope that you enjoy the rest of your day and have a great week ahead. I'm looking forward to seeing you again next time. So with that, I will call this a meeting. Thank you so much again, and I hope you all take care. Thank you so much.